Okay, so Ghana gets a bad rap, right? The narrative is centered around how are these prices so expensive? Is there criminal activity? Oh, it's obviously money laundering. Now, some of these elements, in a way, can be undeniable. The Global Financial Integrity Report highlights that at least 48 million was laundered through Ghana's real estate sector. But for many Ghanaians, investing property is not about money laundering or crime. It's about security, currency, culture, and legacy. And today we're going to explore that in this video. I recently had a long conversation with a well respected developer in Ghana, and it made me think a little bit differently about some of the assertions around the real estate market. And those assertions are well known, kind of money laundering, illicit funds. How is it that these things are able to go up at this price when nobody can afford it locally? I've done a video on this myself. However, you've got to think of it from a perspective of somebody who has built their wealth in Ghana. Now, don't be fooled. There are people who have built considerable amounts of wealth in Ghana, legitimately and less so. But for all of them, they all need a store of wealth which protects them against wildly fluctuating currency values. The developer in question gave a presentation, and looking at some of the key factors, it actually opened my eyes a little bit. What do I mean by that? People who have raised funds in cities are ultimately at risk at all times of currency depreciation. Okay, this is me from the future here. I just had to interject quickly. This video was filmed right at the beginning of May. And if you're following economic and financial activity in Ghana, there has been a massive shift. And let me show you. So as you can see, this chart here is showing your one US dollar to the Ghanaian cedi value. So in 2020, it was hovering above 5 and slowly increases over time, showing a depreciation of the value of the Ghanaian cedi. Then all of a sudden, just as I finished this video, bang, the cedi has unprecedentedly appreciated in value, which is great for the local economy. I won't go into detail now. I'll do another video on it. But it's resulted in things becoming, foreign currencies becoming extremely weaker against the cedi. So I'll come into that later, but back to the analysis, the principles are the same. I just wanted to provide that update. If you were to go back in 2015, the Ghanaian cedi was approximately 3.7 cedis to the dollar, meaning that if you took 400,000 cedis, it was worth the equivalent of about $106,000. But in 2025, you take that same 400,000 cedis, it's now worth approximately just $26,000, with one USD being now 15.3 Ghanaian cedis, effectively depreciating to a factor of 4.5 times as much. Such depreciation underscores the importance of considering currency stability when making long-term investment. Now, in a market with limited financial instruments, real estate in Ghana stands out as a tangible asset that retains and potentially appreciates in value over time. Comparative assets like the Ghanaian Stock Exchange is one of the worst performing. It's not like the S&P where you can pretty much be reliant on a 7% return every year if you just put it in an index fund. Previously, you used to have a heavy slant towards government bonds. Government bonds pre-2023 could range about 15% return. However, in 2024, Ghana implemented a 37% haircut on 13 billion of its Euro bonds debt as part of debt restructuring agreement with bondholders. This involved reduction in the nominal value of the debt, effectively lowering their debt obligations. The agreement also included a significant reduction in the interest rates and the restructuring of the debt repayment cycle. One example that actually comes to mind is the Michael Blackson scandal, where he used the Euro bond, invested in it expecting, I think it was a 10% yearly return that would help fund his school, and instead received a 37% haircut and has to wait a lot longer to get the return. So let's run through an example. For argument's sake, you've invested this 400,000 cedis, which at the time is worth $106,000, into one of these three assets: government bonds, the Ghanaian stock exchange, or real estate. And let's see how they fare. So in government bonds, you can assume a 15% annual return and around 9 years of compounding. That 37% haircut due to the state of the economy took place in 2024. No growth ensued in 2025. So that 400,000 at 15% return over 9 years equals 1.3 million or 35 million cedis by the end of 2023. The haircuts applied, that is now reduced. So imagine 40% of your asset is just gone, 37% to be exact. So that's reduced down to 854,000. So the value of that 2025 Ghanaian cedi at the time looks like it's doubled, right? So 400,000 you had originally in there, it's now 800,000. But due to the currency depreciation, it's actually halved in terms of real value. So it moves from 106,000 to now, adjusting for the dollar, to 55,763. Let's take the other example, the Ghanaian stock exchange, a 12% annual return over 10 years compounded. Again, looks like really good returns. You get to 1.2 million cedis after the 10 years and pretty much 3 times the amount. I remember it was 106,000. However, when you account for the cedi depreciation, that 106,000 by 2025 is now only 81,000, right? So you've lost $25,000. In the other example for government bonds, you lost half your money. It's just gone, poof, like that. Real estate, on the other hand, if you assume 10% annual appreciation, the value in 2025 is not as high as the Ghanaian stock exchange, but the crucial factor is because the real estate is priced in dollars, if you are able to sell in dollars the same way you bought in dollars, you can have a completely different investment. You had $106,000 and you pick something smart, right? Now, I'm not talking kind of your atypical high-rise building, etc. Maybe you picked something with on a large piece of land, or maybe you picked land itself. Maybe you bought a lot of land, because that's something that appreciates and holds its value due to the scarcity of land itself. At some point, land will stop being sold because there'll be none left. So when you think about it like that, and we assume a 10% annual appreciation, but your value is pegged to the dollar because you buy in dollars, or you might have bought in cedis and now can sell in dollars. If you have that 10% across the 10 years, compounds up to 276,000. Now, that's not beyond the realm of possibility at all, especially with land. Because if you buy, a few acres in an up and coming area, or an area where a road is about to be built, that could actually happen. It could have that degree of change. And also, because of the value and the pricing, you could turn around and sell that in dollars. So all of a sudden, a piece of property that you bought that was worth $106,000 or $107,000 has appreciated 10% a year, and the present value would be near $250,000, almost $300,000. So you can see the difference. Because of the cedi depreciation is a major factor that kind of holds us back. And that's why a major factor why real estate looks attractive to a lot of local investors who build their wealth in Ghana, because it's a really good store of value and it's dollar pegged effectively and is more resistant to currency swing. Okay, now a key component of your ability to realize those gains is if you're actually able to sell. Are there buyers in the market looking to buy that property or that land? I would say with land, yes, certainly there should be buyers, especially with rapidly urbanizing cities like Accra, and land coming at a premium. I can see that. But if you've bought something that is in high supply, it will not appreciate in the same way that something that is in very limited supply, i.e. land. You can find more about land on Kuro. You can go in and search your locations, see what kind of pricing you see on land. Everything's in cedis, but you can convert between different currencies, see various stats around the most common pricing around land from area to area, how many listings Kuro's analyzed, so you can start to see where the supply is. And you can also see trends as to see where the land prices are moving to, stabilizing, growing, or declining. But again, even with land, the thing about any marketplace is, can the suppliers and the buyers meet? do people buy at that price point? You can price it at whatever you want, which is typically what happens in Ghana. But how many people are capable of splashing $300,000 out in cash, no loans, unless you leverage from outside, because leveraging internally will turn that into something that's not really feasible. How many buyers are in the market? So you've got to have a real kind of data-driven, research-driven approach to how you move in Africa, because fundamentally African markets are rather opaque. Now, it's not only real estate as a storage of wealth, which I think is a major contributor, but culturally, real estate is really important in Ghanaian society. Land ownership has an affinity with status, has an affinity with progress, an affinity with a rite of passage. You buy your land, you build your house. That's been for decades. It's always been the way. So owning land is more than an investment. It's a cultural milestone and signifies success, provides a sense of legacy in Ghanaian culture. And like anywhere, real estate is often seen as a means or a method to secure the financial future of one's descendants and ensuring long-term family stability. And the family concept is really important in Ghana. You'll hear stories of land being sold by families because that's how it typically works. A key aspect to know and to realize, and I think this is where we are in a weird place in Ghanaian real estate right now, is while property appreciates over time, the gains are only realized when the asset is sold. So, you know, it allows owners, especially in a market with low transparency, to perceive high levels of wealth growth without actually realizing them yet. And this is where the nuance of the Ghanaian economy comes in. I learned recently that the typical difference between a listing price and a sold price is often 30% in low transparency markets, where high transparency markets is only 5%. Now, you can see many a forecast that will talk about Ghana's real estate market reaching a value of 533 billion by 2025, basically now. But what does that mean in terms of actual realized gains? I do think the Ghanaian property market will have a general trajectory upwards. I think there's going to be some bumps in the road near term, but general trajectory upwards just because of the simple degree of urbanization, the population growth that is concurrent with what's happening in other areas of Africa and other regions of Africa. But that doesn't mean it's automatic wins all the time. I think you have to be very smart in choosing what you invest in. Look for scarce property types, scarce amenities, those kind of things. You can find those on Kura with the infrastructure information that we provide. So, in conclusion, Ghana's real estate market is not only about money laundering. It's a kind of an oversimplification. There are other factors. It could be a dominant factor, but there are other factors. And for many Ghanaians, it's about protection against inflation, against currency depreciation, against the unpredictability of financial markets and external factors. It's a legacy move. It's a long game. And it's a hedge in a landscape where few investments hold their value over time, especially when held in local currency. And as we've seen, even when you compare to stocks or even so-called safe bonds, property and real estate often emerges as not just the best emotional investment, but the smartest financial one too. If you're serious about investing in Ghana, especially with a long-term view in mind, make sure you're not flying blind. At Kura Africa, we provide the tools and the data to help you make smarter, more confident investment decisions. Thanks for your time. As always, stay safe and stay informed.